Hey guys, Tim Kotzman here with Ben Werkman. Ben, how are you?
I'm doing very well, Tim. I'm ready to have this conversation. Thank you for inviting me on.
Thanks for making the time. Do you want to start with some of your background and your journey to Bitcoin?
Absolutely, yeah. So my background as far as Bitcoiners go has been a little non-traditional. I actually started coming right out of college in '09. I started in commercial banking. And during that time, as you can imagine, there was a ton of non-performing loans that were out there. And so I joined in as a credit analyst at a community bank here in Michigan, where we were essentially in charge of, working out the bad loans, right? Trying to keep them afloat, giving them more rope if they were going to be able to make payments, right? Finding ways to, minimize our risk where we could. So I started in a very risk-off environment. And that was kind of my initial entrance into the world of finance. And then when I left that, after we kind of got through that period and the excitement was kind of dying down in the banking world, things had stabilized. I went a completely different path, and I actually turned off and went into the consulting world. So I started in the consulting world doing a lot of governance work for a lot of the Fortune 500 companies, and that was essentially focused around IT outsourcing. So application development contracts, infrastructure contracts, things of that nature. And then I did a brief stint off at a tech startup that was doing legal tech, kind of AI for legal contracting, all those sorts of things. And then I decided I was going to venture out onto my own a little bit. And so around COVID, when everyone started getting locked inside and we had a lot of time on our hands, I spent some time, learning how to code, focusing on how could I automate some of my own trading. And then I actually ventured out to build my own platform to do automated trading for retail customers. So that'll be launching here soon, but that's kind of the path that I've gone down from a career perspective. When I look back at Bitcoin, I was actually pretty early to finding Bitcoin. I'm not going to say that I capitalized on that early finding as well as I might have hoped today that I had, but my first finding of Bitcoin was really back in 2012. And, I'd started talking about it. I saw it, I think, at the Wall Street Journal. There was actually an article that was out there
Hmm.
on it, talking about what is this thing? And so I brought it to my dad. He's worked in finance forever as a financial advisor. And so I asked him, like, have you ever heard about this? And so we were talking about it and we were jokingly saying, we should buy 1,000 of them and see what happens. I mean, they're only $200 right now. So, but he couldn't do that because of regulations and all that. So it was a fun daydream. But that was the first time I saw it. And then it kind of faded away for a little bit, right? You didn't really hear about it. You heard about it on that first run up when it went from, being worth pennies to being worth hundreds of dollars. But then it kind of quieted down. And I wouldn't say I really came back around to it until maybe 2017 was when I started really getting back into the fold of it. And that was when a lot of the excitement was coming back into the cycles. And I'm man enough to admit that I may have deterred a little bit and went down the other cryptocurrency paths for a while. And I think a lot of people do. I think it's kind of an important part of the journey to learn what it is that you're dealing with and which ones of these do you really find have value in the digital asset landscape and which ones don't you. And you pretty quickly through that journey, you narrow in fast. And it didn't take long until I really realized that Bitcoin was going to be the one that I could see being the future, right? This was the one with all the characteristics that you want in a financial asset, right? A digital asset in digital form. And so I quickly started changing my focus to just Bitcoin, right? I didn't need to play
Hmm.
around with any of the other stuff anymore. I started watching some of the early adopters that were out here on Twitter and learning about it. And it didn't take long before I was kind of hooked, right? And I have this thing where once I get hooked on something, I want to go deep and I want to figure out how they're created. I want to figure out all the problems they're supposed to be solving with money and really make sure that in my mind, I can articulate the value proposition for it to convince myself that it's an asset that I should be in. And through that journey, that kind of brought me to, okay, I think this is a good asset that I want to own personally, right? This should be a part of my portfolio. But then I started expanding into kind of the corporate world and going, well, how's this asset going to really get into the mix with traditional corporations? How are they going to view this? And as we all know, kind of the first guy that came out of the gate here, who was a naysayer early on, was Michael Saylor. And he took that real bold move as a public company in the United States saying, I believe in this thing now. I was wrong, right? I've done the research. I've spent my 10,000 hours, and this is something that corporations should own. And the conviction that he went in with, even early, when he was essentially completely shifting strategies for his own company that he founded, which is tough to do, right? I mean, getting
Hmm.
married to what your company does is one of those things that I think a lot of us fall victim to, where you don't want to change because you so badly want what you did first to work that you're not willing to pivot. And to his credit, he saw something different. He saw what he had working, but not growing anymore, right? It built him a very strong company. It put him through the ringer, right? I mean, he was one of those dot-com bubble bursts. It was a really ugly time for him, I'm sure. I'm sure there wasn't a lot of sleep during that period. But he was smart enough to really look at this and go, maybe there's a way we can reinvent ourselves and we can look at a different way to utilize the strength of our business that's outside of what we're doing today as our core business, right? The business intelligence side of things. And so that pivot was really, it was tough to digest at first when you hear about it. You know, you start with the small, like, okay, we have cash, we're going to put the cash into Bitcoin. No problem because we generate positive free cash flow. So we have more cash coming in to cover our operations. You know, not really a big gamble there. But when you saw him start to change that strategy and go, maybe we'll go borrow money and we'll buy Bitcoin, right? That's when things started getting really interesting. And you kind of pause and you go, well, wait a second, this is something we've not seen done in corporate America yet, right? Particularly on this scale. And so it starts to draw in your attention. And pretty soon it's really tough to pay attention to anything else because a lot of the other storylines kind of lose their excitement for you, right? They lose their focus because you've seen it before. It's not a new play, right? But it is when you're changing the strategy of your corporation to leverage an emerging asset class, right? That is risky when you look at it, particularly in the early days. It looks less so now because we've had some of these adoptions coming from players like BlackRock and Fidelity and now BNY Mellon and some of these big, blue chip style companies that are out there that everybody knows and everybody trusts, right? These asset managers for trillions of dollars are bringing legitimacy to the strategy. But when he started it, he didn't know that, right? We didn't know that that was going to come. We'd all hoped, right? Everyone hopes that the big guys adopt their thing, right? I mean,
Hmm.
that's always a part of your personal roadmap, but he didn't know it when he embarked on that strategy. And so ever since then, it's kind of hooked me in and I've gone, this is something I really do want to follow, right? I want to see where this goes. I want to see how he's going to implement this strategy. And what's been really interesting along the way is that it's pivoted and evolved in ways that I don't think we necessarily understood early on. So that hooked me in. That's where a lot of the things that I'm now posting out there on X that people have started to engage with, which actually brought us together to have this conversation. It brought me into a really interesting group of people that are thinking differently. And I really value that because I always want to challenge my own way of thinking about a topic, particularly if it's an area that I'm investing capital in, right? When you look at something you're investing capital in, the best thing that you can do is search for ways that you're wrong, right? Because you always want to be right. The best thing you can do is to prove that you're wrong on one of these investments because it allows you that moment to pivot in ways that other people might not. And so I've spent a couple years now trying to find the way that I'm wrong here and the way that Saylor's wrong here. And because I haven't been able to do that yet, it's just led me further and further down this path. So it's been a really exciting journey. And it's been a very fun intellectual journey because it forces you to think about the future where some of these digital assets might really come to the forefront of how we interact as society, how businesses are going to operate, how insurance companies are going to operate. It gives you that freedom to kind of try to imagine what the world looks like 10 years down the road, as we all currently focus on the money printing that's happening, the inflation. It's rampant in politics right now. They're all talking about it. You've got presidential candidates showing up to Bitcoin conferences. I mean, there's a lot of things out there that make people nervous, and this is kind of giving them a way to exercise their mind and come up with a little bit of a brighter future here for what the world of finance could look like and how they can protect themselves as we move towards that future. So it's been a very exciting time, and I'm really glad to be a part of the mix.
Do you want to dive into the MSTR strategy as far as the different levers that Michael Saylor and his team have, from traditional debt, convertible debt, equity, and ATM mechanisms, and maybe as you're walking through that, maybe the right lever for each market cycle or part of a market cycle?
Yeah, absolutely. And that's one of the things that made this play so interesting to follow, is that we're really looking at what I think and what many others think is kind of the best storyline in corporate finance today, because he's taken a very non-traditional approach to this, but he's using all the traditional levers that some of these companies have. He's just utilizing them in a different way. So when you look at kind of the levers that a company like MicroStrategy has to pull on as they implement this strategy, they've really got a few main ones, right? There's the ones that everyone kind of knows about at this stage. There's traditional debt, right? Just taking a loan from a traditional lending institution. But in their case, they're taking that traditional debt and converting it into Bitcoin. They're buying a hard asset with that money. The other ones that you're going to have are things like at the market offerings, ATMs, which most companies that are publicly traded, they have. It's a way for them to raise capital basically by selling their shares into the market at whatever the current prices are, right? So they sell a share, they collect whatever the dollar value is associated with that share price. And in traditional, for most stocks, you're looking at them using that capital for operating expenses, right? Something that may not be accretive to the shareholders directly. If you're just using that capital to keep the lights on, the people that are holding the shares are getting diluted every time that you do that. And that's a problem for a lot of capital intensive organizations, right? To stick with the Bitcoin mining or the Bitcoin space, the Bitcoin mining companies have this problem because there's a lot of capital expenditures that need to be made to buy the mining equipment. And so a lot of times, because they're not good candidates for traditional financial instruments, traditional debt, they have to actually go and raise most of their capital through these ATM offerings. And that dilutes the shareholders underneath, right? And if you can't generate as much value as you're diluting, they've now lost value in their shares. So MicroStrategies is a little different, right? They're essentially looking at this going, when can we use the at the market offering in an accretive manner to our shareholders? And what that looks like to someone like Michael Saylor is they'll look at what is kind of the net asset value of our company, right? Which has largely become tied directly to their Bitcoin holdings. I mean, they have about $17 billion worth of Bitcoin on their balance sheet right now, and they've got, 4.2 billion in debt. But so he's looking at how's our stock trading relative to that asset value. And if our stock is trading higher than one, using the ATM is accretive. Now he's got other tools that he can use as well. So he doesn't have to use it in non-pristine conditions to do so. But when you get to these periods where Bitcoin goes in these cycles that everyone's seen, right? The 4-year cycles where the price starts to run and then you get these lulls. Well, what we're watching right now is we're in one of those cycles where it's moving up. And that brings excitement in the market, and it brings more eyes to MicroStrategy because they're really the first player to do this at large scale. And that new capital coming into the company has pushed the share price higher and higher. So now they're trading, closer to a 3 times net asset value. Well, using an ATM when your share price is 3 times the underlying net asset value on your balance sheet, now you've got a really accretive method to purchase an asset to put on your balance sheet. So he's leveraging those inefficiencies in the market and saying, I can create continued value for my shareholders by ensuring that if I use the ATM and I'm issuing more shares, they're getting more shares, more Bitcoin per share allocated to them, right? So the shareholders win. And this is a cycle that he can do over and over and over again whenever the conditions are right. So it's a new way of thinking about how to use an ATM versus the traditional, we'll use it for an acquisition, we'll use it to fund operations, whatever they may need it for at the time. MicroStrategy is basically saying operations are covered. We have positive operating cash flow, no problem there. we're going to use that capital to buy a hard asset that provides a lifetime of potential return to our shareholders. And that's what they've been doing with the ATM. So that was a new approach to using an ATM. Then he went a step further and he looked at, well, what else is out there in the markets that there's demand for? And one of those things is the convertible debt, right? And convertible debt, for people that might not be up to speed on exactly what those instruments are, is it's a bond with an option to convert into shares at certain prices, right? The conversion price. And there's certain funds or institutions out there that can only trade convertible debt. And so he was looking and going, well, where is there demand out there in the market that will bring capital into this ecosystem? And what do they want? Right? Well, they want volatility. And so what Saylor's doing is he's offering them a product where he's going to sell these convertible bonds at 30, 40% out of the money, right? He's selling them at future prices. They'd get those shares at a price that's 30 or 40% beyond what it's trading at today. And then he's giving them this bond that they can now trade as a part of whatever they've told their investors they're going to do, which is trade convertible bonds. So now they're in the ecosystem. It's a new pool of capital and a new set of demand that comes there for you. And what Saylor's doing is he's taking the capital he raises from the convertible bonds and he's doing, you guessed it, going out, buying Bitcoin with it, putting it on the balance sheet. So it's another one of those ways to lever future value of their company, which is already higher than net asset value, and collect more money through a different instrument and bring that in, put more Bitcoin on the balance sheet. So he's been really using these levers very strategically throughout this process. And we got to keep in mind that we're only about 4 years into this with MicroStrategy, right? And the important part, I think, for him and what he really focused on early was scale. So we saw him being very aggressive throughout the last several years, making sure that their balance sheet is really directly tied to Bitcoin because it creates a separate product offering that they essentially have to bring to the market, which is volatility, right? Everybody loves volatility out here in the markets, whether you're an equities trader, whether you're a convertible bond arbitrage trader, like whatever your game is, you want volatility. That's how you create the